This is Merck on the monthly chart, and after a multi-year consolidation or range-bound price action, price finally broke out back in October of 2022. However, price has been consolidating since hitting a high back in May, and the consolidation could be just a prelude before the breakout. Now, what we don't know is whether it's going to break out to the upside or to the downside. Before we continue with this analysis, let's look at this article. It is coming from the Motley Fool. 3 reasons to buy Merck. So Merck is a pharmaceutical giant and has delivered excellent returns to its shareholders over the past 12 months. As last year's downturn did little to slow the drug maker down. Merck's top-selling medicine for years has been Keytruda. The cancer drug has racked up dozens of indications and continues to improve sales. In the second quarter, Merck's total revenue came in at $15 billion, a 3% year-over-year increase. Excluding the company's COVID-19 medicine, Merck sales jumped by more impressive 11% year-over-year. Keytruda was among the best performers with sales of $6.3 billion, 19% higher than the prior year period. Keytruda will lose patent protections nevertheless in 2028, but until then its sales should continue to move in the right direction. Now, back in late 2021, they completed the acquisition of Acceleron Pharma for $11.5 billion, and they wanted to buy the company due to their potential blockbuster candidate, sotatercept, a potential therapy for pulmonary artery hypertension or high blood pressure. According to a research company, Evaluate Pharma, it deems the most promising R&D project in the pharmaceutical industry, with projected annual sales of $2.6 billion by 2028. Now let's talk about the dividends. The company has other products that perform well in the midterm. You got Gardasil, HPV vaccine, and they also have one of the largest animal health businesses in the world. All this leads to them being able to provide a dividend. The company's business looks pretty solid, as does its dividend. In the past 10 years, Merck has increased its payout by nearly 66%, a respectable level of growth in that time frame. The stock's current yield tops 2.7% compared to the S&P 500's average of 1.54. Merck's cash payout ratio of 67% is a bit high, but still leaves room for more dividend hikes. Alright, so going back to the charts, we're going to go to the weekly chart. And my eyes gravitate to this level here, but it's not, the price structure is not ideal. You do have a rally in price, a couple of basing candles, and then a rally out. However, just below that, you do have what was previous all-time highs back in June of 2022. So what was resistance could now serve as support in the future. And you do have a couple of levels where price dipped, so it's definitely some type of buying here. Let's go down to the daily chart. Now, a couple of things to note. Price is now below all the moving averages. Price is also below the 200-day moving average, which is the line in the sand for a secular bear bull market. You also have the death cross. That's where the 50-day moving average in red crosses down and below the 200-day moving average. So if I was a betting man, the chart suggests price is going to break down to the downside. Another thing to note is that on the daily chart, prices is in a downtrend. Lower high, lower low, lower high, lower low. That's the projection at this point. So scrolling back out to the weekly chart, based on the technicals, Merck is not a buy at the moment, but could be a buy if price declines another $10 to this band, which was resistance, which should serve as support. Thanks for watching. Subscribe. Please like the video.